Finances can be your biggest enemy or your best friend. Hi, I'm Susan. Let's talk about basic finances and then let's get into credit just a little bit. So some of the things that we need to understand is things that are fixed cost that we all are exposed to. Insurance, what's the terms, what's the coverage, what are the deductibles? What kind of relationship do you have with your insurance company or agent? Are they a referral to you? Have you shopped them simply on the dollar amount? But this person or company has to be a trusted advisor, whether we're talking about health insurance or homeowners insurance, any of those things. This is part of your finances. Then let's talk about taxes. And we're about in that tax prep type of season. And quite honestly, that's all year long. How does real estate taxes affect your taxes? How does working a second job affect your taxes? When and how are taxes paid? And what do we do with tax refunds? What's our best manner in using that to the full potential? Now, let's talk about the thing that we deal with every day in real estate. And quite honestly, you deal, no matter if you're young, medium, older, every day is finances. Credit. So let's talk a little bit about how do we know what we spend, how much we should spend. I will tell you that probably an eye-opening exercise is creating a dollar diary. What you're really doing is you're logging every cent that you spend, every cent, whether it be buying something for 50 cents or $50. Use your phone, use a notebook, whatever manner it's easiest for you, but track everything you buy. It'll help you understand where you can cut, where you can budget better, or quite honestly, can you create a different method to still enjoy the things you like, but doing them on more of a budget. So if you're spending $5 a day every day for your favorite whatever drink it is, then maybe enjoying it once a week out and the other 6 days a week at home might save you $25, $35, $50 a week, a month. And then calculate that to the year. Let's talk about credit. So credit is something, quite honestly, it's probably the trickiest thing for all of us to understand. Credit is a lender's way of learning how responsible you are with your money. So think about that. It's how they judge what you can buy. So credit scores are a little bit difficult to understand. So if you go out and search your own credit score company to give you what your current rating is, it can be different than your lender's credit scores that they pull. The guidelines are different. Basic understanding of that is if you're going to prep yourself to buy a house or buy something major, talking to a trusted advisor and getting a true credit score may help you understand also what you can afford. So when we get to credit, first of all, you should never overextend your budget by using credit. So if you only make X amount, you should only be spending a percentage of that amount. Credit is there for a convenience, but should be paid off on a monthly basis. So one thing that's so super important to understand is there's truly 3 types of credit. There's installment credit, like a car loan. There is credit cards, and then there is things like student loans, and those all compile our credit scores. So when we're looking at credit scoring, it means the difference between purchasing a house or not, the rate that we can borrow money at. And everything revolves around looking at credit scores. Whether it be you're getting auto insurance, they pull credit scores. Whether it be homeowners insurance, whether it be a credit card, whether it be purchasing a house, major expenses all look at your credit history. How do we use credit correctly? So this might stump a lot of people, but this is an important factor. You want to keep your spending per month at 25% of your credit limit. 25%. So if your limit on your credit card is $300, the most you should be spending on that credit card is $75 a month. So think about that. Also, the option of opening additional credit cards, not good. You want to keep on a few basic, good interest rate credit cards and find that budgeting your money, your spending, using your dollar diary will help you understand what you really should be spending monthly. Steps to create a really solid credit. And some of this is common sense, and some of this is things that you may not think about. There are things that you might also want to pass on to kids, grandkids, first-time home buyers, any of those kind of things to help increase your credit scores. So let's use an example first. Let's say I'm working with someone who doesn't have a lot of credit. They're not overextended, they just don't have a lot of credit. So they haven't established a car payment and paid that on a timely manner, or they haven't had a credit card and paid it off monthly, keeping it at the 25% of their limit. They have a student loan, but they've had some medical bills, and some of it they just have kind of put to the wayside. They didn't pay it because they didn't really understand their deductible, their insurance, those things. And now it's gone to collection. So let's say before they started the process of this medical collection, their credit score was 690. Quickly, as soon as this hits the credit collection part for this medical bill, it can drop them down to 580, where they're not going to be able to get a loan for a house. And it follows them. So fixing credit is harder than creating good credit. So creating good credit. Let's say you don't have a credit card right now. Go out and get a secured credit card. So you're gonna deposit $300, and then you have a credit limit of $300. So using that example again, fill up your tank of gas, $75, no more than that on that credit card. When you get the bill or the invoice, pay it immediately. Now, I said when it cycles or you get the bill or invoice, that's when you pay it. Sometimes we just want to pay something off. We go through the checkout lane at Target, we spend $75, and we go, oh heck, I want to pay that off before I get my bill. It's not cycling, so that doesn't work to create that outstanding credit score. So remember, the cycling part, when you get your invoice, when you get your bill, pay it immediately before the date it's due. So you do this for a few months, and then you opt to get a second credit card. And two's about good when you're trying to create credit, to repair credit. So this one has also a $300 balance. So remember, our buying power is about $75 or less, paying it off at the end of the month. Learning to budget yourself, learning to understand the fundamentals, insurance, taxes, credit. Those are all things that can benefit you in having good wealth, but also great credit scores for those extended purchases. Everyone knows kind of what we're supposed to do, but this is a great time of year to get back to really setting that budget, learning what we should and shouldn't be doing. And if you get a tax refund, here's the time to clean up any issues that you may have had during the year to start off with a great credit history. If you have any questions, feel free to reach out to me or to your trusted advisor, lender, mortgage company, bank, and they can certainly walk you through the ins and outs of creating great friends by using finances.